The New York session between 8 and 12 is the bread and butter time window of the daily range. It's the sweet spot in the daily candles power of 3, right? That open, high, low close for a bearish candle, or the open, low, high close for a bullish candle. Between 8 and 12, price only does two things. We either have a continuation pattern or a reversal pattern. So 8 AM EST to 12 PM EST is our kill zone. Now at 9 AM and 10:30 AM EST, usually that is the sweet spot in the kill zone for reversal days, for the reversal pattern. So we'll outline this in the charts coming up and we'll see how that is formed. And then we have 10 AM to 11:30 AM. This is when London was a extremely large range, or we have a red folder at 10 AM. Now, continuation days. In a New York continuation, we want to have seen London go below or above midnight opening price to accumulate for the daily range, right? So smart money accumulates sell orders above this New York midnight opening price, right? To continue down lower during the day, and vice versa will accumulate long orders below that New York midnight opening price to go for an expansion higher. So at 8 AM we delineate a vertical line, and when we look left for failure swings, right? Remember back into the core concepts, we've got those LR signatures, low resistance liquidity runs, right? Failure swings, equal highs, equal lows, trend line, and all that kind of stuff. The only two options for framing a trade between 8 and 12 are premium or discount array retracements or stop hunts. So on reversal days, if we are bullish, we want to buy below the opening price at midnight, right? And if we are bearish, we want to sell above the midnight opening price. So at 8 AM we delineate a vertical line, and then we look left for those failure swings, right? Those LR signatures. Then we think back about core concepts, right? Failure swings, engineered liquidity, equal highs, equal lows, trend line phantom, and all that kind of stuff. Now what are we targeting? We're going to be targeting previous daily high or low, right? The easiest drawn liquidity, Asia high or low, or London high or low. The only two options for framing a trade between 8 and 12 are premium and or discount array retracements or a stop hunt. So now we also need to know when to avoid New York session, right? So when do we want to avoid New York session? When London is an extremely large range. And why do we avoid it? Because most of the time the daily range has expanded already, and New York session then tends to consolidate or accumulate or go into like a short-term seek and destroy profile, right? There's no juice anymore in the market and targets have been hit already. Also, when we have a red folder later in the afternoon, like FOMC, most of the time that is at 2 PM EST, right? And then the day before news events such as NFP or CPI. Right, we've got a crude depiction for our short-term perspective bread and butter model, right? Remember, time is very important, so we're gonna be looking for that setup in New York kill zone 8 AM to 12 PM, right? For that continuation or reversal. Now over here, we've got a continuation pattern, and basically what you're looking for is a premium and discount levels. So you draw out your range, right? If you're looking for shorts, you're looking for a premium array, obviously. So that could be a 1 hour or a 15-minute POI. And you can see drawn liquidity over here is lower, and we wait for our price action to go into that premium array and in that specific time zone. That is very important, right? Now, looking for liquidity, very important. We look for those failure swings, right? We can see those failure swings down here, another failure swing down here, and then that smart money reversal happening in our POI. That's what we wait for, and then the setup will form in our sweet spot from 8 AM to 12 PM. Now what is option 2 in the continuation? So we either hit a higher time frame premium or discount array, right? Or we look for that stop hunt and then continuation lower into our drawn liquidity. So basically we go back to that sweet spot, right? 8 AM to 12 PM EST. We see structure breaking down. Again, looking for liquidity, we see those failure swings, right? We want to have that low hanging fruit, that easy target. So when we break down, we have a clear draw on liquidity and continue down into those lows, right? We had that stop hunt on the 1 hour or 15 minute, right? So we know, we think back about order pairing, right? On the core concepts, we order pair down up here, and then we continue down lower, breaking structure, and then we have that continuation between that 8 a.m. and 12 p.m. time window. Right, let's talk about that reversal pattern. Now, this looks like a market maker buy model, right? We have that original consolidation over here, and also we always draw out our New York midnight opening price, right? Because we want to be a buyer below this timeline, right? The New York midnight opening price, and we want to be a seller above it. So with a market maker buy model, we identified that original consolidation. We've got also those equal highs, right? Or failure swings up here. So we have a clear draw on liquidity for this one. And then we wait for that discount array to happen and that specific time zone. So 8 a.m. to 12 p.m. This is where the reversal can occur. So over here we hit that array, right? The discount array. We break structure up inside the kill zone, and then we're going to be looking for our setup. So same structure over here again, right? Only one difference, it's the time window is extended to the right a little bit further, right? Because then in late London we hit that discount array instead of that New York kill zone time frame. Now this is fine because we can still catch an entry because we wait for that specific time window, right? We know break of structure and the discount array has happened already, so that sweet spot should be hit within our kill zone, and then we still have that market maker buy model which we can complete. Right, so over here we've got a Euro USD 15-minute chart. Now what do we want to do first, right? We want to delineate our New York midnight line, right? We've got that on the chart until 12 p.m. EST, right? The end of the New York kill zone. So what do we want to do at first? We want to draw out our New York opening price line, right? Because we want to be sellers above and buyers below that, right? We've got that line outlined over here. So we can see price is starting to accumulate above this New York midnight opening price. And why is it doing that? Because smart money wants to accumulate their short orders, right, to continue down during the day. Now let's think about what time zone this is happening, right? We've got London open kill zone, right, 2 a.m. to 5 a.m. and think about London almost always creates high or low of the day unless we hit a higher time frame POI where we can have a reversal, right, during a New York session. But accumulating short orders above that New York midnight open price over here, and then think about order pairing, right? From the core concepts, we've got that order pairing above those buy stops, and then they drive price down lower during the London kill zone 2, breaking structure lower, and then for us we wait for that specific time frame, right, at 8 a.m. to 12 p.m. EST for that New York kill zone. So outlining a vertical line from 8 a.m. and then from this point on we're gonna be looking for low resistance liquidity, right, and or we're gonna wait for that higher time frame or that premium discount array to be hit, or we wait for that stop hunt, right? So two things: we hit a premium or discount array and then continue our way down, or we're gonna wait for that stop hunt. Now, do we have news, right? We need to see, always keep an eye on that economic calendar. We've got 10 a.m. consumer sentiment, so highly likely what we just talked about, right? You want to have that 10 a.m. to 11:30 a.m. as your sweet spot for looking for a setup. If we don't have high impact news at 10, we can do it from 8 a.m. already. So in our specific time frame over here, we wait for either a stop hunt or a premium retracement, right? So what happens over here? We've got that 10 a.m. news, right? Price drives up and does a 15-minute stop hunt, and after that we can look for our setup, right? So this time we did a stop hunt instead of a premium retracement, and we kind of also went back into this fair value gap, right? That's a premium array. So from that 15-minute chart we dive into that 1-minute chart, right? We've got that 15-minute stop hunt, and again think about order pairing, right? Their buy stops are paired up with their sell orders, so price drives lower and lower and lower, and from this point out we want to see all bullish candles being support for lower prices, right? We got that bearish order block formed after we ran liquidity, and then we're going into a sell program, and we can see that over here it's offering support lower, and then every up close candles, set of up close candles should be supporting price lower. You can see it here over again, right? And just keep outlining this on your chart, and this is every time you can pyramid an entry on these types of candles, right? So we know the sell program is activated. We are in the sweet spot, right, at 8 a.m. to 12 p.m. EST. Now high impact news has occurred. We already had that stop hunt, so if you were to enter on this first order block, stop loss will be above this high, right, this stop hunt. And think back about that market structure too, right? We've got that intermediate term high formed, which should be protected and not get traded back into again. So this is a good area where you can place your stop loss. Now price comes back into it again, turns down lower. We have another bearish order block formed over here. Price goes in it, trades down lower. We got another bearish order block formed, and this will continue on and on and on until we hit our draw on liquidity. Right, outlining a few more. Bearish order block up here, then price drives lower, another bearish order block, price drives lower, another bearish order block, and just keep outlining those bullish candles, right?